Okay, hello everybody. Thanks for bearing with us for that. Welcome and thanks very much for joining this sort of emergency AFN Network Plus webinar following the Chancellor's autumn budget last week. I'm Jez Frenenberg and I'll be your chair today. I'm based at the School of Environmental Sciences at the University of East Anglia, where I'm the Knowledge Exchange Fellow for the AFN Network Plus. If you don't know about AFN and you've not joined one of our webinars before, just to let you know, it's a UKRI funded sort of academic project focused on identifying research gaps that could help reduce emissions in the UK agri-food system in what is this critical decade. So also with me is Professor Neil Ward, who co-leads AFN and is also based at UEA. And our two speakers, I'm very pleased, are both here now. Jason Biddell, Head of Rural Research at Stratton Parker, and Emily Norton, a farmer consultant and one of our policy champions. So today's topic, we are...
Jez, there's a couple of people that are saying that they can't hear in the chat. I wonder whether, if anyone can hear, they can put up in the chat if they can hear, so we can just check.
Okay, Natasha can hear. Yes, lots of people can hear.
Okay.
I think if you can't hear, that might be to do with your own, I'm not quite sure why that would be. I think that might be something to do with your own audio. I think I'm going to have to carry on if you have a look at that. So I don't think I can, hang on 1 second.
Carry on, Jez, everyone can hear.
I don't think I can do anything with that, I'm afraid, for now. Okay, so yes, today's topic, we are going to be looking at the issue that has dominated headlines, opinion pieces, radio phone-ins about the autumn budget. That is changes to inheritance tax, specifically the reduction of agricultural property relief. So many farmers have been very vocal about the potential impact of this, and there's a lot of fear that it will lead to the breakup or a breakdown of family farms. So let's be mindful of that anxiety, I think, when we're talking about this today. Others, though, have been saying that the hype is quite overblown and it will only impact the very richest. So this kind of confusion and mix of views hasn't been helped by the fact that there are multiple figures floating around about how many farming businesses the changes will affect, the thresholds, and to what extent it will therefore have an impact on the sector. So what we're going to do today is try and get to the bottom of some of these questions, but also, and importantly for our network, is to take the discussion on further to look at the impact on farmers' ability to reduce emissions and lead that transition to a more sustainable food system. So what this is not is a tax advice webinar for farmers. That's not our role or our expertise. We will leave that to other people. We will be asking questions though, like, you know, how might the changes affect farmers' ability to enter into natural capital markets and contracts? What about tenants and land ownership? What are the many nuances at play, including culture, emotional ties, wealth and business viability? But mainly our focus will be on farming's big role in getting us towards net zero. So we are going to move on to Jason. Jason, are you able to share your slides, get your slides ready, or do you need anyone else to share those for you now?
Neil is going to share it for me.
Oh, can you just repeat that, because I couldn't hear you properly.
Neil is going to share them.
Neil's going to share them. Great. Okay, good. So that's great. So Jason has done some number crunching for us and he's going to present what he's found. Then Emily will dive more into the environmental questions. Afterwards, we'll have maybe a 30-minute Q&A. So please put your questions in the Q&A box and use the chat for other things. Just to introduce Jason a bit more, he's head of Stratton Parker's Rural Research. He supports the firm's rural team with information analysis on farming, land management planning, environment, energy, forestry, and rural capital markets. So Jason, over to you.
Well, thanks very much, Jez. Thank you very much for inviting me, and I hope you can all hear me okay. Make a sign or put it in the chat if you can't. If we move on to the first slide, Jez has set this up perfectly, and I just want to reiterate, I'm not an accountant or a tax specialist, but because we're involved so much in cultural property, we thought we could give an objective assessment of how this change in agricultural property relief might affect the land market, but also might affect farming businesses. So what I'm going to do is just very quickly, in about 10 or so minutes, run through the main change, how we think it might affect businesses of different sizes, and also different nil rate bands of inheritance relief from inheritance tax that people have available to them. And then, as Jez said, Emily's going to develop the conversation into its possible effect on the environment as well. So this is on the screen what got changed at the budget. Before the budget, the vast majority of farm businesses could transfer to the next generation without paying inheritance tax. Post-budget, that agricultural property relief, and I'll call it APR for short, has been curtailed. Inheritance tax is a personal tax, so the new APR limit of £1 million is per individual, and it's important to know that it's not transferable between spouses. So that's our starting point. On top of that, there's the usual nil rate band that anyone of the general public gets, which is £325,000, plus the residence nil rate band, an additional £175,000. So in theory, an individual can get up to £1.5 million of relief from inheritance tax, and a married couple theoretically up to £3 million. So that's the setup. And if we move on to the next slide, I'll show you how we've tried to assess how it might affect farms of different sizes. So as you can see on the left-hand side, we've looked at farms of different sizes using DEFRA's categories from very small to very large. And if you move on to the next slide, you can see what percentage of farms that is. So these are figures for England only. DEFRA assumes that there are about 98,000 farms. So you can see that the vast majority of these farm businesses are categorized as very small. And as you move up the size categories, I think you're starting to get into commercial farm businesses when you get to the medium-sized category, large and very large. And we've, using DEFRA's figures, estimated the average size of those different size categories. So you can see for the medium-sized farm, the average size is 149 hectares, which is 370 acres. And I think what's quite telling about this is the very small category, which is just under half of these farm businesses, are pretty small businesses. So 16 hectares, which is a little bit under 50 acres. If you move on to the next slide, we've made an estimate of the value of these different size farms. And we've done that using average land values. So we assumed £9,300 per acre. I know that that's going to be different for different farms, but that's the current average price being paid for pasture land. Arable land is selling for a bit more than that, but we thought we'd be conservative in our estimates of value. On top of that land value, we've added some capital for buildings and a house, £500,000 for a house. So again, fairly conservative, £500,000 for buildings. Again, based on our data, probably fairly conservative. And what we can see, if we move on to the next slide, is this is how much the inheritance tax bill could be after the nil rate allowances. And we've used a number of different rates, because not every farm business will have £3 million nil rate available to them. Some might only have 1.5 if it's a single farmer, for example. So you can see the effect. So if we look at the middle row, so for the medium-sized farms, and let's assume that they have £2 million of allowance. So this is probably a farming couple or a farming family. Then potentially the inheritance tax bill before you've done any mitigation work is just under £500,000. Of course, there are ways to try and reduce this. And I'm going to come on to those in a second. Before I leave this table, though, you can see that the effect on the inheritance tax payable really depends on the amount of that nil rate allowance available to a building. And of course, farming families, individuals might also have other interests, another property, perhaps another business, and the relief has to be shared between not just the farming business, but any of those other interests as well. So that's why we thought it was quite helpful to have the different rates of nil rate allowance that might be applicable to the farming business. The other thing to see from this is that the inheritance tax liability increases by farm size. So for the bigger farms, you can see that it increases quite significantly. If we move on to the final slide, this is just some considerations of when you're thinking about this, because as well as the farmland, the farmhouse, the farm buildings, there may be other assets involved as well. If we just think back to the farmhouse and its value, we've been quite conservative. And the other thing to bear in mind is that not all of the value of that farmhouse may receive agricultural property relief. The second point I was going to make is a way to potentially really significantly reduce the inheritance tax liability is by using lifetime transfers. They're available now, and they're going to be available in the future as well. That wasn't changed in the budget. One thing to bear in mind with lifetime transfers is that they can trigger capital gains tax on any increase in the value of the asset that you're transferring, and of course, making that kind of transfer can incur professional fees. And then the final point I wanted to make before I hand over to Emily is that we think that these changes, they are worrying for an awful lot of farming families, are likely to lead to more intergenerational tax planning and business management. And although this might not be the best reason for doing it, or a particularly pleasant reason for doing it, rather, that's actually quite a positive thing to happen. That said, having more than one generation active in a farm business can increase complexity in managing that business, although lots of very successful ones are multi-generation. And of course, bear in mind, if you're going to separate assets out across different ownerships in a farming business, and they become separate businesses themselves, then you might need separate accounts for each owner. So I hope that's a helpful introduction. And Emily, I'll hand over to you now.
Thanks very much.
Emily, should I just give you a very quick intro so everyone knows who you are a little bit more? So Emily is our AFN policy champion. She's had 25 years experience in the food and farming sector, including head of rural research at Savills, time in Brussels, and also her own family farm in Norfolk. She offers strategic advice for the land management sector on rural policy and emerging trends. And she's a member of the National Committee of the Country Land and Business Association. Jason, that was a really good introduction. Thank you so much. If you're able to just put yourself on mute and turn your camera off, and then Emily can go ahead. Awesome. Over to you, Emily.
Jez, I didn't want to speak for too long, so don't run away. I think this needs to be a conversation really as quickly as possible, because the nuances here are so important. I think my comments off the back of what Jason's just said, though, is really to keep in mind that we need to have a very balanced and calm conversation about these changes and consider the bigger picture. I think there's been an awful lot of fairly reactionary comment in the press, and it really is time, as you very much alluded to at the start of this, for us to have a very kind of calm consideration of what these changes are going to be and how that's going to play out on some of these bigger picture issues. And so without belittling at all the stress that this is going to cause farming families, and I'm a farming family, I'm part of a farming family, and it's going to put direct costs back onto our family to sort of change the tax planning arrangements that we'd been existing with up until last Wednesday. There's going to be additional costs there. However, there are definitely elements of silver lining within all of this, and I'm focusing on two, plus a plea to government for some urgent intervention on some of the things that are going to be manifestly negative. The speed of the change is the thing that's manifestly negative, and because of that issue around lifetime transfers still being inheritance tax free, there are going to be some older farmers who are very embedded within their tax planning structures, were hoping to be able to pass assets on tax free at death, and are now unfortunately too close to that stage to be able to change those tax planning arrangements. For those family businesses, it's manifestly unfair, and I think the industry needs to be very needs to be very together in going to government to say these are some examples of where this is going to negatively impact. We can't do tax planning, that's not fair. And I think government really needs to take that seriously and come up with some interventions that help those families who are not able to do tax planning now in the way that Jason's alluded to being possible. I think the two things that are going to be beneficial are going to be having succession conversations earlier, and that I think is going to be a good thing, rather than this bias that assets and sometimes control in farming businesses gets passed on at death. Having those conversations sooner is going to be a good thing. And just to give an example of that, I was just asking my own parents this morning how the last death in our family was handled. When my grandfather died in 1977, that was before the introduction of agricultural property relief, which only happened in 1984. They didn't pay very much inheritance tax at all because all of the assets had been passed on sufficiently before death. The transfer of the business already occurred. And I think that's just going to be normalised again, while still accepting there's going to be situations of unexpected deaths, for example, which are going to have to be dealt with probably through insurance somehow. I think the other thing which is really relevant for this network and the Agri-Food for Net Zero network is how this publicly shining a light on the tax reliefs that farmers get will help start a conversation around how those taxation reliefs can be either progressive or regressive when it comes to evolving the industry towards something more sustainable. And this is a really big bugbear of mine, because at the moment, the definition of agriculture that enables us to access agricultural property relief is a pretty backward looking definition. It really refers back to kind of how we've understood farming to be for the last 30 years. And it really doesn't speak to how we want farming to become in the next 30 years. And whilst we're still able to jump through these hoops to look at business through an agricultural lens and say that they qualify for these still generous relief, we're going to be caught within that paradigm of agricultural activity being deemed to be productivist intensive agriculture, rather than more wider beneficial forms of farming that are more environmentally focused, for example. And I think that is going to be a really interesting conversation to take forward about how the tax system can begin to leverage some of the outcomes that we need.
Thanks, Emily. You've set us up nicely. Jason and Neil, do you both want to turn your cameras on and come in? we can have a bit more of a discussion before opening it up to participants a little bit more. So I wonder if we can start to sort of dig in a little bit more to what this might mean for tenants in particular, and land ownership and consolidation, and particularly then the ability to take on these like long-term government contracts, you know, and sort of landscape scale recovery and all of those sorts of things. Like, what does this sort of do to all of that? Emily, do you want to take that up, or Jason, do you have thoughts on that too? Or
yeah, absolutely. I mean, I can probably kick off, and then you can probably speak more to the practical decision making, Jason. I think one of the things that there was quite a few things that got mentioned on Wednesday last week in the budget, which have been overlooked in kind of the noise that's happened on agricultural property relief since. But one of them was equivalence of inheritance tax relief being given to some kinds of long-term environmental land management schemes, and particularly those with a local authority or with a government agency, so public-facing schemes. And that means if a landowner is looking to put a piece of land into, for example, biodiversity net gain for a long time, at the moment, they wouldn't have been able to qualify for agricultural property relief. But under these new changes, they'll be able to qualify for something like environmental property relief, and the exemptions will be the same. So it acknowledges that that definition of agriculture was a barrier to landowners thinking about long-term environmental changes, and so it's a positive change. However, I would say it really doesn't go far enough, because for a lot of this, and particularly thinking about the agricultural tenanted sector, we're still caught by that restrictive definition of agriculture, and that might be something that kind of maybe Jason, you could speak to a bit in terms of how landlord and tenant agreements are structured for agricultural tax reliefs.
Well, I can a little bit. Agricultural property relief applies differently to different types of tenancies. Most of the tenancies that we've been creating for the past 20 years got full agricultural property relief. So that's going to be a bit more restricted now, which I think is a real shame. I think our initial reaction when we heard the budget was actually landlords might be a bit more reluctant to let land out initially anyway, because they'll want to understand the tax implications. But actually, having thought about it, I think this could be quite positive for the tenanted sector. I can actually see landlords wanting to let more land out, because there are probably, we don't understand all the implications yet, but probably fewer reasons for farming in hand than there were pre-budget. But I really enjoyed your point about suppose allowances and special treatment for special types of land management. And you mentioned environmental management. Tax is a very powerful lever that the government can use. I mean, the farming sector might not like to hear that, but if the government wanted to encourage a bigger tenanted sector, more environmental management, you could see it using inheritance tax to encourage that kind of behaviour. Put more land give that land a more favourable tax treatment, and of course there's precedent for it. We've already got conditional exemption, which does exactly that for land property with historical interest.
I think since you're talking about tax as a lever, Jason, I wanted to ask this question, which I sort of emailed to you, I think, last week. You know, if you were Rachel Reeves and you were trying to devise a tax system to reduce emissions in the agricultural system, like what would you do? Like, how would you use these sorts of levers, and how would you leave? Would inheritance tax be one of those levers, or anything else like it? Emily.
It might be easier for me to answer that one, because I can be slightly more unhinged in my answer, as in I'm not constrained by any particular kind of, you know, corporate approach or anything. I mean, this is just an opinion, but yes, of course you could. and I was being, I don't know, provocative with a, WhatsApp chat of mine saying, who there are farmers in there who are justifiably frustrated by these changes and feeling that government isn't listening to them, and saying, well, if you begin to align the tax system behind those broader government agendas for environmentally positive net zero farming, maybe one concession they could now make is to say that we will reinstate 100% inheritance tax relief, but only for farmland that's managed under a recognised system of environmental management, or perhaps only for farms that can prove that they are net zero. And would that sort of, cause a big behavioural change in how farms were thinking about how they were managing themselves, because they would need to adopt a system of management that sort of, fitted into that tax relief box. And it's not so different from how, that definition of agriculture sort of, it enables land uses to be considered within tax reliefs. It would just be hugely updating that definition of agriculture to be something which was positive and forward looking. So, would the farming lobbies like it? Possibly not. But, would it be a powerful tool that government could pull? Absolutely.
And how is something like that? How do you sort of balance that with the need for maintaining or even increasing like food production potentially, especially if we're sort of thinking of that in the wider context of elms, and I know lots of farmers who've taken land out of production. Like how these are all sort of moving parts, aren't they?
Jason, do you want to go, or do you want me to kind of opine again?
I can answer first if you'd like. I think, Jez, what you do is monitor the effect of the policy, rather like the government already does with things like agri-environment schemes. At the moment, the evidence is that agri-environment schemes haven't really reduced food production very much, and in fact, they probably contribute to increasing food security because they make land more resilient and the ecosystems function, which is what farming needs. So, Emily, what do you think?
Well, I think I completely agree with what you're saying. There's a huge amount of evidence which aligns good environmental outcomes with good food producing outcomes. I think what we are lacking is an effective framework where food producing systems interact with environmental outcomes at farm level. And by that, I mean that supplying food into an agri-food market feels like a very risky thing, and an increasingly risky thing for farms to be considering doing. And being able to put 100% of your farm into an agri-environmental scheme completely de-risks land ownership whilst still qualifying for tax relief, for example. Now, government has dialed back on that a bit, thinking that too many farmers might be putting 100% of their farms into the sustainable farming incentive, for example. 100% of my own farm is in mid-tier countryside stewardship for exactly that reason. We're a small farm. We felt that actually interacting with food markets for us at the moment wouldn't be viable. And so this is a de-risked option. But if lots of farmers take a de-risked approach to land management, producing food doesn't really feel like a sensible thing to be doing. So there's something about that relationship with food supply chains that means farmers are going, maybe we've had enough of this. And unless the reward is there from those food supply chains in order to justify the risk and the cost of capital and the need for reinvestment within the farming system and the need for reinvestment within natural capital, farmers, I think, increasingly are going to be risk averse, particularly in a changing climate where weather extremes are tougher, and therefore be looking for safer and the safest options. Now, some of that might just be continuing business as normal, conventional agriculture. There was a really interesting report put out by the Business Bank of Britain and Soil Association Exchange, saying that for many farmers, conventional agriculture is the least risky option. So that's what they're going to stick with. Why adopt a more environmentally friendly form of farming when it's riskier? And I can see that in this environment where the financial landscape is tougher, why would you adopt more risk? Versus actually, as Jason's just articulated, working with nature, investing in your environment is the most resilient way of doing it. So we've got a real conundrum here. And if there's a third silver lining, and this is absolutely my most optimistic silver lining ever, it's that we have to now take that dynamic between farmers, food, and the environment really seriously, because otherwise farmers are just going to say there's no point us producing food because we're not being rewarded for it. And I do think government needs to take that seriously.
I think you're echoing some sentiments on the chat. I can see someone's written producing food is not rewarded. Neil, you wanted to come in, and can I just ask everybody, if you've got a question, please put it in the Q&A, because it's quite difficult for me to find your questions in amongst all the chat as well. And I'm seeing a lot of questions, like very specific questions about tax itself and everything. But like I mentioned, this is I'm sorry, this is not we're not offering advice today on that. That's not our role. None of us are accountants, so we are talking much more about the overall impact. Neil, do you want to come in?
Yeah, I agree that this is, in a sense, it is quite an interesting sort of prompt to opening up these questions about the role of the tax regime in sort of incentivizing different types of land ownership, farming practice, and the sort of farm production versus different dimensions of environmental management. And I think that's where we can, add something distinctive. But I would just like to take a step back and just try and establish. So Jason said, sort of thinking about succession earlier and a more active tax and business management is a positive thing. And I would just quite like to understand a little bit more about what does this reform do to trigger the need for a more sort of extended process of thinking and planning for succession? So that's the first part. And of course, not all farms are being managed with a succession in mind. And I know there have been periods where the proportion of farms that are being run with a succession intended diminished quite a bit through the 80s and 90s. The second part of the question is about sort of changes in land occupancy. So differences in tenure, the amount of rented land perhaps becoming available, new entrants to the industry. So does this reform sort of do anything to free up or liberalize or make more sort of fluid changes in who's farming and where they're farming, or does it ossify things? So the two parts, what's so advantageous about planning succession in advance carefully, and what at headline level does this change look like it might do in terms of people coming in and going out of farming and changes in tenure?
Yes, would you like me to tackle the first one of those?
Yeah, please do.
The first question, Neil, was why does it lead to more tax and succession planning? I think until the budget, with 100% agricultural property relief for a lot of farms, they didn't really have to think about early succession very, very much because they had that relief to rely on. Now that relief is much more restricted for many farms, unless you want a fairly hefty inheritance tax bill, you need to think about it in advance. One example I heard earlier in the week was of a farm business where there's a 75, 80-year-old owner, still holding the checkbook, running the business, but with a younger generation ready and waiting. So I suspect the conversation with him is probably going to be happening now. We have got some time. Don't forget, these changes don't happen till April 2026. But the conversation's happening, hopefully happening for two reasons. One, to try and reduce the tax that could be payable, and two, because actually I think it's probably quite healthy for a business to have those kind of discussions, introduce new ideas, and that could contribute to a business becoming or being even more nature positive or contributing towards net zero targets.
Emily, did you have anything to add to that?
Yeah, I think we have to be really careful about this narrative of family farming, because it seems to have been picked up now in this kind of like zeitgeist in the media furore that's going on, in it being a family farm tax. So there isn't a default assumption that family ownership is the best thing for farming, and you can read around this internationally, and actually sort of the intergenerational transfer of wealth and protecting of land as well between generations, it can be seen to be just excluding to new entrants. So, there shouldn't be a default assumption that the next generation, that a farmer's daughter is the best person to be taking over the business just because that daughter is the daughter of a farmer, for example. I think there needs to be maybe some tougher conversations about who are the next best generation of farmers, and are they people who are outside of farming altogether at the moment, and how do we make sure that they have access to land and resources and working capital to be able to meet all of these goals and all of these expectations that we've got. I also kind of challenge this idea of legacy a bit, that sort of, farmers feel that they're successful when they've passed the farm on to the next generation and they've secured their legacy. I understand that, but for far too many farmers, that legacy is one of sort of destruction and pollution and not accountability and lots of negative things that we see in the science around our sector at the moment. And so these emotional ideas of legacy and family can be positive, but they can also be negative. And therefore, I think it's really important that when we lean in to some of these emotional arguments, we're quite clear about what it is that we are saying, who's impacted by that, and who's also excluded from those conversations as a consequence of these things. So in my mind, it's very nuanced. If land is sold in order to meet a tax bill, the implication is that land is purchased. So it's not that the land is lost. The land is still there and we can still do something with it. And successful businesses need to expand. And this is the difficulty. If good businesses, if viable businesses are impacted by these changes through no fault of their own, that's an issue. But if it's the natural cycle of new businesses growing, of new businesses arriving, good businesses expanding, declining businesses fading away, then I think that is something that we do champion, and it is required in order to kind of keep us moving towards these goals that we need to get to. So I think it's a much more balanced social argument, and we are in danger of polarizing it around ideas that are not necessarily going to resonate with all of society.
I just picking up on that though, and like you say, sort of expanding businesses, but also ones that are contracting. I just want to pick up on a question from Chris Manley, who probably, I know Chris is has a family farm himself, and probably echoing a lot of what other people are thinking, which is, the succession conversations are positive. However, the big elephant in the room is how a farmer is going to pay for this. And I mean, if we go back to Jason's table earlier, I'm just looking here, small business, small farms, if we say it's a conservative estimate, so 26%, average farm size 67 hectares. I mean, even if they've not got all the allowances, they might still be paying like 100 grand or 200 grand or something, which is a lot of cash for a fairly small farm. What do you feel that is the right level? I'm just sort of tapping into what Chris is asking, and also a question from Tom McMillan, who's based at RAU, saying, is that threshold, the sort of £1 million threshold with all those extra bits and pieces, is that actually the right amount? Does this need to be reviewed? What are your opinions? Jason, did you want to come in on that?
Well, I can I can give you some context on how much and how a farm could raise what the liability might be. So, Jez, I'm going to take the slightly bigger size farm. I was going to go for the medium sized ones, and assuming that they've got to find around about £500,000. And let's not forget that on average, a generational transfer might happen once every 40 years. So I know this works on paper, and it probably won't work for most businesses, but it's, I suppose it's a way of thinking about it. So £500,000 over 40 years means you have to try and generate about £12,500 per year. And if you work that out per hectare or acre of the farm, it's about £34 per acre. So I suppose put into those kind of terms, it feels slightly more manageable.
It's fairly substantially less than average rents that a tenant would be paying. So for all of these landowning farmers who are shocked by this, there is that, you know, the tenant farming sector's first call on their business is paying rent. And I think that, you know, so that there's something in the system somewhere that can accommodate this. I still think we need that focus on supply chain rewards, because all of the capital of agriculture is underinvested and is in urgent need of investment. And if you consider that to be the built infrastructure or the natural capital, which is kind of where we think about things from a carbon perspective, all of that needs investment, and that investment has not been there. So this low return environment that we've been stuck in a cheap food economy, that's the thing that needs breaking, and we need to be able to move this conversation forward from here.
Is it likely to affect investment at all, do you think? Depending on the farmer's age, if someone's in their sort of, I don't know, 50s or something, is that, or 55, something like that, approaching this sort of more risky age, I mean, is that going to affect investment into a business potentially?
I mean, I think it's going to be tough, because a lot of farmers will have been making borrowing decisions based on an understanding of tax not being due. And if they're not in a position where they can now change their tax planning, they're going to have an additional financial risk within the business. And I think that kind of thing needs time to work through, time to go back to government to say there are going to be negative consequences. Businesses who have done the right thing, who've invested for their own future, are now being negatively impacted by the pace of change here. And I think the government needs to take that kind of thing seriously. The broader question is, and certainly in my situation, my older generation don't want to invest. They don't want any risk in the business. They sort of see it as a pension pot, and a very risk averse pension pot. I see it as something that could provide my livelihood and income if I was allowed to take some risks with it. And so being clear between generations, having aligned expectations on how the business can perform, I think that's quite challenging. And the more that can be concentrated within the younger generation with time to make a return, you know, accounting for disasters. But I think that's really important. I think that the younger you can start to have a go at this with the time it takes to make returns, the better the opportunity will be.
So it's probably going to be a bit of a shock potentially for the older,
I think,
generation.
Short to medium term turbulence for sure.
Yeah. Just moving on to a question here from somebody called Rebecca Lawton. She says, I like what Emily's saying here about who is included and who is excluded. However, what mechanisms can we put in place to ensure that land sold isn't just snapped up by large neighbouring farms rather than passed on to new entrants? Also, I agree there is a benefit to land being passed on to new entrants rather than successors. However, the skills of people who've been brought up on farms and knowledge of that land shouldn't be discounted. She's asking how do we sort of balance this and the need for kind of, she's saying, redistribution of land. Jason, do you have any thoughts on that? Or Neil, did you want to come in? This seems like something for you as well, your social scientist hat on.
Well, you know, for buying and selling land, there's a market. And so I think it's quite difficult to sort of try and discriminate in terms of who buys land that's up for sale. You know, you might prefer some people to buy it rather than others. That feels very, very difficult. So for me, that wouldn't be the key question. I think probably for me, a more important question is, if there's this change and it is as profound and significant as the coverage suggests and the claims are suggesting, then how can we ensure that the incentive system helps for progressive, advantageous, multifunctional land use that's delivering on environmental benefits and food production? And I guess, you know, a lot of the coverage, I mean, the front page of the Telegraph yesterday was saying this is a threat to food security. I think that issue, and I can see some of the comments are talking about 75% of food is produced on land that will be affected by these changes. So there's quite a lot of interesting sort of statistics being thrown out in the public debate, which suggests that this is going to have a large-scale, widespread detrimental impact on UK food production and food security. And I don't understand what the argument for that is, because I don't really see that as being particularly connected. I don't know whether Emily or Jason have got thoughts on that, but that's the thing that's sort of taxing me at the moment, to coin a phrase.
I think, Jason, did you have your hand up just then?
I did. I was just going to go back to the original point about the land market. I think making an intervention so that land is only available to new entrants would be a really, really significant change. So I hold the same kind of concerns as Neil. But if you wanted as a government to introduce a policy to encourage new entrants, I think there are probably easier and better ways of doing that. You know, what one would be to encourage letting to those kind of new entrants. A lot of landlords would perceive that to be a more risky type of letting. So how do you encourage that? Well, you can do it possibly through the tax system, either income tax or capital taxes. So I think again we're back to if the government wants to encourage certain types of behaviour, then it has got levers it can use to do that.
Well, then I think one thing we've not mentioned then is the potential to sort of for land consolidation into, would this, if farms are having to sort of sell off land in order to pay a bill or something, and like Emily said earlier, other businesses need to grow. Are we just going to end up with bigger and bigger and bigger farms, smaller numbers of bigger farms? Is this some? I mean, I feel like this is something that people are kind of voicing quite a lot. What are your takes on this, Jason? Is that something that would happen?
It's been stated European policy for a very long time that if we're going to support farmers, we need fewer farmers. So kind of consolidation has been this inevitable trend for a very long time. The question is, does this accelerate it? And is that a good thing? So is farm consolidation part of a future vision for land that we want to endorse? And I think politically we haven't had the bandwidth for that question, because at the moment we still don't have a vision for land in this country. We don't have that kind of unifying thought that says this is how we sort these different trade-offs and priorities. And that's not a land use framework, it's sort of the technical answer. This is the vision for food and farming and land use in this country. We talk a lot about food security, but we don't talk about fibre and fuel security. The land needs to provide all of these things. We don't talk about ecosystem services enough to understand that the land needs to be doing all of these things, not just providing one thing. And so that plurality of land use, in my mind, immediately speaks to a plurality of land occupation models. And whether it's corporate ownership or charitable ownership or private family ownership or institutional ownership or whatever it might be, I really don't care, provided it's accountable. Like provided the ownership of that asset is providing things for the wider public concern and meeting those societal expectations. I think I'm pretty agnostic about whether it's a new entrant or a 18th generation family, right? We just need a vision that allows everybody to have a chance. and to respect that everybody's bringing different skills and capabilities and strengths and scientific knowledge or market opportunity or custodianship or whatever it might be. And there's a place for sharing this knowledge. And the worst thing we do is kind of have that Englishman's home is his castle approach to agriculture that means that everything gets concentrated and restricted. So the more that we can open this conversation up, the better we will be, I think.
It's an interesting point. I think some people might come back and say large parts of the food system are already consolidated in very few hands. So what is the impact on that? There's a point here about the potential impact on kind of local community and culture and people, the public's affinity to farmers if they become less like the farmer down the road that they know and more like the big agribusiness that's a few 100 miles away or something. So anyway, there's something there. But just want to move on to another question, also from Tom McMillan, asking, which is really probably a good one to end on actually, which is about the potential effects that you've mentioned on environmental management, and is there a potential indirect impact through how the issue has been polarised? He says it feels like it's been seized on as a chance to channel broader concern / outrage about agricultural policy. Is that what is happening? Any views on where agricultural industry bodies and media should be engaging farmers and government on this issue? I would also add in that if we go sort of beyond that, it has already been jumped on by exactly the same voices, same sort of very noisy individuals who whipped up a lot of animosity and all the farmer riots in Europe and everything as well. So there's a real, feels like it's been seized on. So I think there's a larger question around the framing and the government's ability or inability to frame big change like this and take farmers along with them. I don't know if you have any thoughts on that. Neil, did you want to come in on all of that, sort of around that sort of larger impact, polarisation and sort of framing of this sort of thing?
Well, only, I guess I would say, with the election of a Labour government in July, I sort of thought to myself, well, I wonder when the rural culture war backlash thing will start. And it started a couple of days later. And there's a sense that it's just the same as 1997, where, in terms of the sort of national party politics, rural and agricultural issues become a terrain on which the parties can sort of have a bit of an argument. I'm not sure the extent to which this move was really carefully sort of thought through on the part of the government. I don't know, which is why I'm sort of interested in what these other rationales and potential benefits of the reform might be, other than just raising money. I mean, I thought it was quite curious that in the Commons, when I think it was when the minister was answering questions on this, the point was made either by the minister or by someone else, one of the backbenchers, that there are ways in which this can be avoided. You can take steps to avoid the exposure to the tax. You can take out insurance against sudden unexpected death, and you can plan to sort of minimise the tax exposure and things like that, which seemed a curious response if this is all about trying to balance the public finances and raise tax. So I mean, I've found a lot of the coverage in the press, not very helpful, particularly the stuff on food claims about food security and the depths of the sort of the catastrophe that's going to be wreaked. But I do think there's a real opportunity here to think about, because we, in our work in the network, I don't think we think enough about the taxation framework, which is clearly quite important in stimulating some kinds of practice and inhibiting others. So I think it's an important thing to open up and talk about and think about, if we can cut through all the noise.
Emily and Jason, any last thoughts on this whole issue of how it's been delivered, the sort of, whether it's polarising and the sort of more widely really around government framing around these sort of big agricultural changes? Jason, did you want to come in first? And then Emily, if you can, that'd be great.
I think it was a change that a lot of the farming sector feared, but was possibly inevitable. I think the government communications around it, which probably echoes what Neil's just said, feel like they've been quite poor. They probably couldn't have said much in advance, but they could have probably been more prepared for the reaction to try and allay some people's fears. I don't really understand the backlash in terms of food security, because I don't think you should try and set up food production against the environment. Both need each other, and I don't think this is going to affect certainly not food security, because land, whoever farms it, is likely to be farmed. I support some of what Emily said earlier about actually being quite agnostic about whether it's a family farmer, a bigger farmer, a tenant farmer. I think the really important thing is that it's done very well.
Emily, do you want to round up, and also just bringing it back to the question net zero? You know, how does all this framing and what's happened and the way it's been delivered, how is this going to impact you know, our ability to really reduce emissions in the farming sector?
I think this will serve to remind government that farmers are very, very quick to play the victim card and to complain that stuff is being done to them and that the world should feel sorry for them. And that makes it very hard to think about some of the regulatory changes that are necessary and the evolution that needs to happen to take us towards a net zero nature positive future. If farmers don't get on board with feeling that this is something that they own and can benefit from and can deliver on behalf of society, we're going to be up against it in terms of meeting those expectations. And I feel that's partly a problem of our political leadership within government, and that's been mentioned, but it's also really a failure of our unionised leadership and sort of agri-political leaders who, in my mind, have been far too quick to make this a toxic issue. When we think about the number of things that need to change, we need everybody aligned, and that really is a question of strong leadership. Yeah, much to do.
Okay, a good way to end. Thank you, everybody. Thanks for coming. Thanks, Emily, Jason, Neil, for all of that. We've been recording this, obviously, so I will put it out on, it will be going on YouTube, on the website. I'll be sending it out in an email to the network in a few days. So if you're not already a member or you didn't tick yes when you signed up for this webinar, do sign up so you don't miss it. I will put the links in the chat shortly. Please also take a couple of minutes just to rate this webinar. It'd be really helpful for us. AFN funding is due to run out in about a year's time, so it would really help us make the case for continuing in some way. Our next webinar will be in 2 weeks' time on the 20th of November, called World Building and Behavioural Change, How to Make Healthy and Sustainable Diets the Easy Choice. And I'll also put that in the chat in a second. Also check out our website. We've got a resource hub full of all the back catalogue of all the webinars that we've done, briefings, digests, and a library of essential reports. So look out for that. So thank you, everybody. I'm just going to post one of these links now, and then I think that's it. So thank you very much. Thanks, everyone.